Oil prices hit a new low on Wednesday, with Brent trading below $50 per barrel in London before bouncing back. Some experts believe the continued overall fall could be the biggest threat to the world economy since the 2008 global recession. Brent crude is a global benchmark commodity, and plummeting prices have been causing shocks on the world markets, including Russia. It also paints quite a grim picture for energy companies. The US shale gas industry is in the firing line, and hundreds of billions of dollars in investment could simply come crashing down, as Gary Chikian explains.
Tempted by big returns, companies big and small have borrowed a lot of money for fracking. Their debt is now estimated to be around $200 billion. It was raised mainly through bonds issued on Wall Street and in London. At current oil prices, many companies won't be able to finance that debt. They need prices of about between $60 and $100 per barrel to be able to break even. Economists say a default on that debt, as well as risky oil bets that banks and corporations have probably made, could lead to a collapse in global financial markets, similar to the 2008 crash.
It begins in one place, like fracking in North Dakota or Texas, but it very quickly engulfs the rest of the world. And in that way, it's very similar to what happened in 2008, when you had a problem in the subprime housing market in the United States, billions of dollars lent to people who bought homes that they could not pay off, and then that became a global capitalist crisis.
So essentially, fracking could become a victim of its own success. The industry expanded rapidly as the method proved capable of extracting oil and gas faster and easier than before, albeit with a certain amount of environmental problems. But the shale business is very expensive, and companies have been borrowing money faster than earning it. Now, some of the largest drillers have reported cuts in production, while analysts say it will prove particularly hard for smaller ones. Here's Ed Hears from the independent oil and gas company Hillhouse Resources.
We've already seen Baker Hughes and Halliburton agree to a merger, and these were two titans who competed head-to-head. They've decided that they can't survive separately. They need to combine, and they're going to do that. And we're going to see a loss of technological innovation and a loss of competition in the oil service business because of that. As long as the price is down at these levels, the fracking in the long horizontal wells in the other shale plays across the United States, these wells will be non-economic to drill. They won't be drilled. And so we'll see producers lay down rigs. I think some of the estimates are now as many as 500 onshore rigs will be laid down this year.